Preparing for an AML, a financial crime at MUFG interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What do you understand by AML and financial crime risk in a global bank like MUFG? AML is the control framework that stops criminals from using the bank to move, hide, or legitimize illicit funds. In a global bank like MUFG, I would think beyond money laundering, sanctions evasion, terrorist financing, fraud, bribery, tax crime, and trade-based laundering. The job is to understand customer risk, monitor activity, investigate red flags, escalate appropriately, and protect the bank, customers, and financial system while supporting legitimate business. While answering, focus on AML as a risk management framework, not just compliance. Cover money laundering, sanctions, terrorist financing, fraud, customer due diligence, monitoring, escalation, and protecting the bank. Question 2. Why are you interested in an AML or financial crime role at MUFG? MUFG interests me because it combines global scale with a strong relationship banking culture. Financial crime risk is particularly important where there are cross-border payments, corporate banking clients, trade finance, and correspondent relationships. I like AML because it requires judgment, evidence, and curiosity rather than simple box ticking. At MUFG, I would expect high regulatory expectations, complex client activity, and the need to balance commercial service with strong controls and integrity. Make sure to connect MUFG's global banking footprint, Japanese ownership, institutional client base, and cross-border activity with your interest in risk, investigations, regulation, and ethical decision-making. Question 3. Walk me through the 3 stages of money laundering. Money laundering is usually described in 3 stages. Placement is where illicit cash first enters the financial system, for example through deposits or purchase of monetary instruments. Layering then creates distance from the source, using transfers, shell companies, or cross-border movements. Integration makes the funds appear legitimate, through investments, loans, or business proceeds. In banking, transaction monitoring, customer due diligence, sanctions screening, and investigator judgment help identify these stages. In your answer, talk about placement, layering, and integration. Use a practical example, explain how banks detect each stage, and avoid sounding purely theoretical. Question 4. What is the difference between CDD, EDD, and ongoing monitoring? CDD establishes who the customer is, what they do, who owns or controls them, and whether their expected activity makes sense. EDD goes deeper for higher-risk customers such as PEPs, complex ownership structures, high-risk jurisdictions, or unusual products. That may include source of wealth, source of funds, adverse media, and senior approval. Ongoing monitoring then checks whether actual activity matches the profile and triggers refreshes or escalation when risk changes. Be sure to mention customer identification, beneficial ownership, risk rating, enhanced checks for higher-risk customers, periodic reviews, event-driven reviews, and transaction activity compared with expected behavior. Question 5. How would you investigate a transaction monitoring alert? I would start by understanding why the alert triggered: value, frequency, geography, counterparty, or pattern change. Then I would review the customer profile, KYC, risk rating, expected activity, ownership, and previous alerts. I would compare the activity with the customer's business purpose and look for red flags such as rapid movement, round dollar payments, high-risk jurisdictions, or unrelated counterparties. Finally, I would document my rationale clearly and either close, request more information, or escalate. While answering, focus on a structured investigation process. Understand the alert, review customer profile, compare expected versus actual activity, examine counterparties, document rationale, and decide closure or escalation. Question 6. What red flags would you look for in corporate banking AML cases? For corporate banking, I would focus on whether the activity fits the customer's stated business. Red flags include payments to unrelated third parties, rapid pass-through of funds, sudden activity spikes, transactions with high-risk jurisdictions, complex or opaque ownership, and counterparties that do not match the business model. I would also consider adverse media, sanctions exposure, and vague payment references. The key question is whether there is a clear, legitimate commercial rationale. Make sure to cover unusual transaction patterns, shell companies, mismatched business activity, high-risk countries, rapid fund movement, complex ownership, negative news, and weak commercial rationale. Question 7. How do sanctions risks differ from AML risks? AML focuses on identifying suspicious activity and potential criminal proceeds, while sanctions focus on whether the bank is dealing with prohibited parties, countries, vessels, goods, or sectors. Sanctions can be more immediate because a true match may require blocking, rejecting, or freezing a transaction depending on the regime. Screening names, counterparties, payment messages, beneficial owners, and jurisdictions is critical. I would treat possible sanctions hits urgently and escalate under policy before releasing funds. In your answer, separate sanctions as prohibited or restricted dealings from AML as suspicious financial activity. Mention screening, list matching, ownership rules, strict liability, escalation, and blocking or rejecting payments. Question 8. What would you do if you identify a potential sanctions match in a payment? First, I would not release the payment until the potential match is resolved. I would compare identifiers such as name, address, date of birth, registration number, country, vessel details, and payment narrative. If it is a false positive, I would document the rationale. If the match remains plausible, I would escalate to sanctions compliance under MUFG policy and avoid tipping off the customer. The decision may involve blocking, rejecting, or reporting depending on the applicable sanctions regime. Be sure to describe stopping or holding the payment, checking match quality, reviewing identifiers, applying policy, avoiding customer tipping off, documenting evidence, and escalating to sanctions compliance. Question 9. Explain beneficial ownership and why it matters in AML. Beneficial ownership means identifying the real individuals who ultimately own or control a legal entity. It matters because criminals often use companies, trusts, nominees, or layered structures to hide control and move funds. In practice, I would look at ownership percentages, voting rights, management control, and any person exercising effective control. Clear beneficial ownership helps risk rate the customer, identify PEP or sanctions exposure, and understand whether transactions have a legitimate economic purpose. While answering, focus on identifying natural persons who own or control legal entities, transparency, shell entity risk, thresholds, control tests, and why beneficial ownership supports sanctions and AML decisions. Question 10. How would you handle adverse media found during a KYC review? I would assess the credibility, relevance, and severity of the adverse media. A reliable regulatory notice or court record carries more weight than an unverified blog. I would check whether the news relates to the customer, beneficial owners, directors, affiliates, or key counterparties, and whether it involves financial crime, fraud, corruption, sanctions, or regulatory breaches. Then I would document the assessment, consider EDD or risk rating changes, and escalate where policy requires. Make sure to cover source credibility, relevance, recency, severity, connection to the customer, corroboration, risk rating impact, escalation, documentation, and potential EDD or exit recommendations. Question 11. What is a politically exposed person, and how should a bank manage PEP risk? A PEP is someone who holds or has held a prominent public function, along with certain family members and close associates. The risk is not that being a PEP is illegal. The risk is potential bribery, corruption, misuse of public funds, or influence. I would manage PDP relationships through EDD, source of wealth and funds checks, senior management approval, adverse media review, and closer ongoing monitoring. The level of scrutiny should match the actual risk. In your answer, explain domestic, foreign, and international organization PEPs, close associates and family members, corruption risk, EDD, source of wealth, senior approval, and ongoing monitoring. Question 12. When would you escalate a case for a suspicious activity report? I would escalate when the facts create reasonable grounds to suspect money laundering, terrorist financing, or another financial crime. I do not need to prove the crime. I need to show why the activity is suspicious and cannot be reasonably explained. Examples include inconsistent customer explanations, funds moving through with no business purpose, hidden ownership, or links to adverse media. I would document the evidence clearly, follow internal SAR escalation procedures, and avoid tipping off. Be sure to mention suspicion based on reasonable grounds, not proof. Cover investigation findings, unresolved red flags, inconsistent explanations, documentation, internal escalation, confidentiality, and avoiding tipping off. Question 13. How do you ensure your AML investigation notes are high quality? Good investigation notes should let another reviewer understand exactly what happened and why I reached my conclusion. I would summarize the alert, customer profile, transaction pattern, relevant KYC, red flags reviewed, sources checked, and any customer explanation. Then I would clearly state whether the activity is consistent or suspicious, supported by evidence. I avoid vague statements like, looks fine. Strong documentation matters because regulators, auditors, and senior reviewers may later test the decision. While answering, focus on clarity, evidence-based reasoning, audit trail, source references, explaining why activity is or is not suspicious, avoiding unsupported assumptions, and making decisions reproducible. Question 14. What is trade-based money laundering, and what red flags would you look for? Trade-based money laundering uses trade transactions to disguise value movement, often through over-invoicing, under-invoicing, multiple invoicing, false goods descriptions, or unusual shipping routes. In a bank like MUFG, I would look for invoices that do not match goods, prices far from market levels, third-party payments, inconsistent counterparties, high-risk jurisdictions, or dual-use goods concerns. The goal is to decide whether the documents and payment flow support a genuine commercial transaction. Make sure to connect trade finance with invoices, goods, shipping routes, pricing, dual-use goods, mismatched documentation, third-party payments, high-risk jurisdictions, and unusual commercial terms. Question 15. How would you assess AML risk for a new corporate customer? I would build a risk picture across several dimensions. First, I would understand the customer's business, ownership, controllers, industry, and source of funds. Then I would assess geographic exposure, products requested, expected transaction volumes, counterparties, sanctions touchpoints, PEP links, and adverse media. A simple domestic manufacturer may be lower risk than a complex offshore holding company trading in high-risk corridors. The outcome should drive the risk rating, due diligence depth, and monitoring intensity. In your answer, talk about customer type, industry, ownership, geography, product usage, expected activity, source of funds, adverse media, sanctions exposure, and assigning a risk rating. Question 16. What is the purpose of a risk-based approach in financial crime compliance? A risk-based approach means the bank applies more scrutiny where financial crime risk is higher and simpler controls where risk is lower. It is practical because not every customer, transaction, or jurisdiction carries the same risk. For example, a high-risk cross-border corporate structure may require EDD and closer monitoring, while a straightforward low-risk entity may not. This approach helps MUFG allocate resources effectively, meet regulatory expectations, and protect customers without creating unnecessary friction. Be sure to explain that controls should be proportionate to risk. Mention resource allocation, regulatory expectations, higher scrutiny for higher-risk customers, and avoiding both under control and unnecessary friction. Question 17. How would you manage pressure from the business to approve a customer or release a payment quickly? I would stay professional and explain what is needed to resolve the risk, rather than simply saying no. If a payment or onboarding case has unresolved AML or sanctions concerns, I would follow policy even if the business is under time pressure. I would communicate clearly, document the issue, provide realistic next steps, and escalate where required. In financial crime roles, good client service means protecting the bank and legitimate customers through sound, defensible decisions. While answering, focus on professionalism, independence, explaining risk clearly, following policy, documenting decisions, escalating when necessary, and balancing client service with regulatory obligations. Question 18. What role do the 3 lines of defense play in AML governance? The first line, usually the business, owns the customer relationship. and must identify and manage risks in day-to-day activity. The second line, compliance and financial crime, sets policy, provides advice, monitors controls, and challenges decisions. The third line, internal audit, gives independent assurance that the framework works. In AML, this model matters because regulators expect clear ownership, strong escalation, and evidence that controls are embedded rather than sitting only with compliance. Make sure to define front office ownership, compliance oversight and challenge, audit independent assurance, and how clear accountability supports MUFG's control environment and regulatory confidence. Question 19. Describe a time you had to analyze incomplete information and make a risk-based recommendation. I would structure this using STAR. For example, in a KYC review, if ownership documents were incomplete, I would first identify the specific gaps and why they mattered. Then I would gather alternative evidence, check public registries, review adverse media, and ask targeted follow-up questions. If uncertainty remained, I would recommend EDD, temporary restrictions, or escalation depending on risk. The key is not guessing. It is making a transparent, documented recommendation based on available evidence. In your answer, use the STAR method. Emphasize structured analysis, assumptions, evidence gathering, stakeholder communication, escalation, documentation, and making a balanced recommendation despite uncertainty. Question 20. What qualities make someone successful in an AML role at MUFG? A strong AML professional needs integrity first, because the role involves protecting the bank even when decisions are commercially inconvenient. Attention to detail matters, but so does judgment. Not every alert is suspicious, and not every explanation is credible. I would also highlight curiosity, clear writing, stakeholder management, and resilience under deadlines. At MUFG, teamwork is important because financial crime risk often crosses business lines, jurisdictions, operations, and compliance teams. Be sure to mention integrity, attention to detail, curiosity, judgment, clear writing, stakeholder management, resilience, regulatory awareness, teamwork, and willingness to challenge respectfully. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.